Vanguard's very interesting investment forecast. Now, this is, I've been following Vanguard for, look, I worked it there, 98, 99, and 2000. So I'm very fond of Vanguard. I knew Bogle before I even started working there the whole time. I've said this a million times on Sunday. Their investment forecasts are what I used in Right Capital. All right, so I use their 10-year investment forecast in Right Capital. And you're going to see, I'm going to show you. This is from June right here. Vanguard's Capital Markets Model Forecast. Very interesting. It's been a while, but at least 3, 4, maybe 5 years ago, I knew a guy that worked at Vanguard, and he said they did not even use this in their financial plans. I don't know if that's still true. Maybe this is 6 years ago, but wow. And I don't know if it's still true now. I was like, what? You guys don't use your VCMM? He goes, no, we use historical rates of return. I said, I can't believe that. Anyway, I got to get a haircut. I couldn't believe it. But I used the Vanguard Capitalist Models market in my Right Capital assumptions. My man, I forgot to do his name, Bob. Bob just sent me an email from Right Capital showing that they still have pretty high assumptions in the Right Capital default models. So if you're using another Right Capital guy or Right Capital that somebody else, their models might be significantly different than mine because Right Capital has the default model still being like a 10% rate of return for stocks or something like that. I don't come anywhere near that. So let's look at the Vanguard models here, right here. For example, we now expect the broad U.S. market of investment-grade bonds to return between 4.6 and 5.6% a year annualized over the coming decade, which is up from 4.3 to 5.3 2 months ago. Now that's, very, very interesting because if you look just a couple years ago, it's like 2. So it's basically Pablo every single time. I don't get it, buddy. So the investment returns that Vanguard's expecting on bonds has gone from like 2% just a few years back to like 4. To 5 now. That's a 250% increase. 150% increase in what it was. Crazy. But bonds are going to get killed right here. 4.6 to 5.6. Will they be right? I think so. I have bonds a little bit lower than I have bonds about 4% in Right Capital. I'm not going to adjust it midstream. By the way, I don't. I do it once a year and that's it. We'll see what the Vanguard models say in December. But 5% on U.S. investment grade bonds is pretty good, man. I'll take that. That is all U.S. government. It's not just U.S. government bonds, but investment grade, corporates and everything. That makes sense to me. Which is up from 30 basis points from just 2 months ago. All right, U.S. and non-U.S. equity returns have edged up a little bit as well. So here we go. We're 10 years. Equities, U.S. equities, they're expecting it's about 4.25 or so right there. 4.25. Look at that. That's crazy. Non-U.S. they're expecting about 7.75. So a significant difference for non-U.S. equities and global equities. And look, Vanguard's been riding this horse for a long, long time. They're never going to get off it, obviously. But I don't have any international stocks. I got everything tied up here. And that doesn't mean you should. I don't care. But look at that. Significant difference between their emerging markets, global stuff, than U.S. stocks. Crazy. Significant difference between U.S. value and growth. I've been saying this for many years, that value has underperformed growth for a significant amount of time. And this last run-up since the bear market of tech stocks has only exasperated that. So right here, U.S. value, they're predicting about 5.75. Growth, they're predicting about 1.75. Pretty significant. So if you don't have any growth, if you don't have any value stocks, you might want to get on that just to be diversified. And the S&P 500 is going to be a little bit more on the growth side right now if you look at these tech stocks, but still it's going to be close. It's about as diversified as you can get. The total stock index, which I own, predominantly my biggest holding by far, is going to be small cap, mid cap, large cap, predominantly large cap, and a mix of growth and value as well. So you just have one fund, you're covered all bases. But if you don't have any value stuff, you're just on growth, I think you're making a big mistake. I do. I just think that's too much in one area, especially given the run-up we've had. They expect pretty good returns for REITs over the next 10 years. That would be about a little bit about 5, 5.25, 5.5, not too bad. Here's their government bonds right here. Look at that, right about 4. About 4.25. 4.25, 5 roughly for U.S. aggregate bonds, about 4.5 for U.S. Treasury bonds. U.S. intermediate credit right there. Tips way down here. Cash. What's cash going to give us about there? About 4. They're expecting about 4% on cash. Yeah, man. Ginnie Mae's about 4.5. Commodities, they're expecting. Look at the commodities. They're expecting good returns on commodities, about 7% on commodities. So, and then inflation running about looks like about 2.25 or so. I'm not gonna, again, I don't adjust this until at the end of the year, so just FYI. Anyway, there you go, man. That's pretty interesting. And again, you can see their global stock. They give a foreign emerging markets credit. Global bond, yeah. So global, there's absolutely no reason to be in international bonds. I've been saying that for freaking since I started this channel. It makes no sense to be in international bonds. But there you go. So if you have a 50, 60, 40 portfolio of stocks and bonds, you're looking at about 5.25% rate of return. Yes, slice off a 2.25% inflation, you're getting a 3% net rate of return. Man, we'll take it, man. It's better than a freaking hole in the head. My right capital, I'm a little bit lower than that right now, but again, I'll adjust it as situation is. I'm not sure I'm going to go back to inflation 2.25. That seems awful low to me, but I don't think I'll go that low. This is just, again, for the next 10 years. They got 30 years as too, but I'm not going to talk about that right now because 30 years is just way too speculative. Now, love your thoughts. What do you think? Are you seeing anything else out there? GMO, they're like, oh, we're all going to die. I don't know who else is. I don't know anyone's overly optimistic. Jeremy Siegel, maybe. I haven't followed him much, but no. Let me know what you think. God bless.